Hi everyone, it's a daily 10-minute business and finance news wrap for this Friday, the 8th of October 2021. Later, the US government agrees to temporarily lift the US debt ceiling so the market rallies. But first, to the work from home movement and the impact on CBDs. Private health fund operator NIB is encouraging its 1,200 employees to work from home at least 4 days a week and only come into office hubs for a purpose, like meetings or social events. And employees will get an extra allowance of $1,200 a year to help with the costs of working remotely, effectively paying them to rent a space in their home for work. I spoke earlier with its CEO, Mark Fitzgibbon. Mark, you're encouraging workers at NIB to work from home for 4 days a week. Why?
Well, we're giving them the option to work at home to give them more flexibility, and with that, we hope becomes greater productivity. And so far, it's proving very popular, and it's something, of course, Ricardo, that's only been enabled by technology. Without the Zooms, the WebExes that we enjoy today, the telecommunications we enjoy, this wouldn't be possible.
What kind of support have you had from employees to show that they want to do this?
Well, it has been. It's now an option once lockdowns come down, but hasn't been an option in recent months for all the reasons we understand. So basically, our policy is you get to work wherever you choose to work. For most, that will be home. It's important to understand people will come together. In our future vision, people will come together into what we'll call hubs for where that's warranted, for training, induction, scrums, project meetings, client meetings, management meetings, celebrations. So it's important to understand that in this world, people do come in the office where that's warranted, but that's not the default position as it has for bureaucracies for probably 150 years now.
Isn't the issue there, though, that it needs to be planned collaboration then, as opposed to being more spontaneous?
A bit of both. And certainly, I think one of the consequences of this change will be leaders will be encouraged or even forced to be more deliberate about their fundamental management responsibilities. And that is, making purpose clear in the organisation, setting goals and accountabilities, organising the kind of collaboration, which sometimes happens spontaneously, but more often than not needs to be coordinated and planned.
For your employees, how are you helping them out financially and, more importantly, mentally, if they are deciding to opt to work from home for those 4 days?
Well, all employees, even if they come into work, and we recognise for some employees, working at home is just not an option for them for all sorts of circumstances. So hence we are retaining a series of hubs within the business. In terms of supporting them, all of our employees are getting $1,200 per annum as an allowance. Now that recognises two things. Firstly, we're effectively renting their homes. But secondly, we're making a massive productivity improvement, a cost saving associated with this. And philosophically, we think it's appropriate that we share that productivity improvement with our people. Now, in terms of their psychological well-being, we are acutely aware of the risk of loneliness and isolation. Hence, we will be arranging for people to come together where circumstances warrant. But look, I think, Ricardo, easily the greatest thing we can do for our people is to give them a very clear sense of purpose and help them understand their role in that purpose, and be providing them with the mentoring, the coaching and the kind of feedback that people naturally need.
I'm really curious to get your view on the future of the CBD. I mean, we've had the New South Wales Premier call for people to return to work with the easing of the mask mandate indoors sooner than expected. If more organisations are going to be doing what you're doing, though, what do you think it'll mean for the future of the CBD? And I guess more importantly, for those small businesses that operate within the CBD?
Yeah, well, look, I feel for the people who have been impacted by COVID-19 in this way. And nobody celebrates that kind of misery and disruption. But the truth of the matter is CBDs have been disrupted in the past. With the technology of the motor car, retail was able to shift away from the radial networks which fed CBDs to go shopping in suburban shopping centre. Now, this is another change being driven by technology. Only in this case, it's technology associated with communication. So it's going to be disrupted, CBDs and their commercial tenants, but they will survive just as they did post suburban shopping centres and the technology of the motor cars. And they will be backfilled most likely with more residential development, hospitality, pubs, restaurants, and entertainment. But there's no doubting it's terribly disruptive to a lot of businesses within CBDs.
NIB CEO there, Mark Fitzgibbon. To the Australian share market, which rose today, the S&P ASX 200 up by 0.9%, 7320. BHP, one of the best gainers, up 3%. Of course, it follows the US government's approval to temporarily increase its debt ceiling. For more, I spoke earlier with Omkar Joshi from Opal Capital Management. Omkar, the market seems to have rallied following the US debt ceiling deal, but this was never really going to fail, was it?
Yeah, look, it's been an issue that's been talked about for many years, and it happens again and again every single time it comes up. But the reality is it never becomes an issue. They normally get it through, and as time would tell, this time again, they've got it through. There hasn't been a problem, and the market's popped, but it happens like this every single time, really. So, yeah, I don't think there was really any worry that would actually fail, but the market tends to always pop on the back of it because it's one less thing to worry about.
What are the broader themes to be having a greater influence on the share market at the moment?
Yes, at the moment, there's a few things going on. So obviously the debt ceiling is one piece, which is now out of the way. But then there's also things like China at the moment with the energy crisis there, especially with coal and electricity, and that's flowing through into Europe as well. So there's a broader energy crisis with gas prices, and it's flowing through into oil as well. So that's been definitely a thematic over the last few weeks in particular. On top of that, there's also things around the non-farm payrolls that'll come out tonight and what's happening there. Bond yields have actually started moving up again. Inflation worries starting to creep up again. Also lots of supply chain issues for a lot of companies coming through as well. And so all of those things are potential things to worry about at the moment in the markets, and they're all definitely driving markets at the moment. And I guess the last piece is really China's been off for the last week with Golden Week. They're coming back on, and so how that plays out. And we've also seen a bit of a pop in iron ore today now that it's started trading again, but does that sustain? Is that a short-lived bounce? And then we start to see it sell off again next week. So there's a few things there.
One thing out of China that made headlines last week was Evergrande. You didn't mention in that list. Does it bother you? Are there concerns there?
So I think what's been happening there has actually been something that's been talked about in China since the end of last year. I mean, they came out with their new rules around 3 red lines, etc., and they do want to deleverage the developers there. And so that's been something that they've been focused on at the government. So while we started worrying about it a few weeks ago and everyone was talking about it last month, it really wasn't a new issue. It's been something that's been happening for a while. It's not really a Lehman moment, although there's been a few comments around that. Potentially it is. I think the big difference is that the Lehman moment means that it actually comes out of the blue. This has been pretty well known, well canvassed. The government's across it, and so it's actually a slower reduction in leverage. So I don't think Evergrande's too big an issue. I mean, we're seeing some of that spill over into some of the other developers in China as well. And look, that's not great from a demand perspective, especially for iron ore and obviously steel. But I don't think it's a big issue that goes worldwide and becomes a big problem with lots of contagion or anything like that.
Okay, locally, AGM season, CBA, one of the banks next week. What do you think are going to be the themes coming out of AGMs?
So I think there's going to be a lot more trading updates that come out of AGMs. I mean, we've already seen results happen. And I think what you're going to get is more of an update, especially when we think of maybe some of the retail stocks. You'll get some sort of update in terms of what they're seeing trend-wise that in the last couple of months since results came out. And that'll be interesting just given that some retail stocks have been shut down. But as we go into the reopening, what they're seeing, if there's any update to their expectations. And then across the board as well, we'll probably hear a bit more around supply chain issues, how that's actually constraining earnings potentially, what that actually means, especially leading up into Christmas and also with the reopening. So we'll get a bit more commentary out of some of the companies that have their 30 June year end. So that's basically what I'll be looking for.
Just finally, you mentioned some of that wall of worry that's hitting the share market at the moment, right? I'm assuming that'll add to volatility going forward. So how do you invest in this type of a market?
So I think this market, you do need to be a bit more careful. I mean, we've already seen a bit of a sell-off over the last couple of months, but the market has had a very good run. And so that's important.
Omkar Joshi there from Opal Capital Management. This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.